Hello everyone, and I welcome you on today's stream at Exness. So hopefully you hear my voice and see my video. So I'm Stan, I will be a host today. So as usual, our Tuesday streaming sessions are held here on the Exness channel. So give us a like, subscribe, bring your friends, fellow traders. So hopefully that will be useful and beneficial for you. So yeah, let's get acquainted. For those who don't know me, I'm Stan. I'm senior trading specialist at Exness. Also, I'm a trader with experience in the markets for over 20 years now. So it will be in November, it will be 21 years. So I have something to share with you for those especially who are starting the markets, starting their journey in the markets today in 2025. So that's what our sessions are about. I will share with you some preparation process, some thinking process, top-down analytical process in order to help you prepare for the trading day, for the trading week, in order to help you learn building good positions with limited risk and extended reward and master the trading game. So that's what our streaming sessions are about. So yeah, we have chat here on YouTube. So I remind you that you can ask your questions, post your questions in chat, so I will be more than happy to answer if I could do that. So yeah, without further ado, let's go and let's The sound. Yeah, okay. Sorry about that. Yeah, the sound, exactly. Yeah, now the sound is good, right? Sorry about that. I was speaking in the void. All right, so guys, do you hear me? Do you hear me now? Yeah, so thank you for putting this comment. Otherwise, there would be no sound, and I would be speaking to no one. All right, yeah, let's continue. Sorry about that. Yeah, so by the way, hello everyone. So Joyce, Abati, Amos, Mabin. So I don't know if I spell your names right, guys. So I apologize for that if not. But yeah, good to hear you all on the stream today. Sorry about technical glitch. Let's continue. So what we want to understand right now in the beginning of the week, we want to understand the basic market conditions. So how the markets operate, and what are the basic market conditions. So let's see major developments. So first of all, let's start with the FedWatch tool. FedWatch tool is the tracker which is published absolutely free on the website of cmegroup.com. You already know that if you've been in our streaming sessions before. So it's a tracker that helps you understand probabilities of interest rate scenarios for different Fed meetings. For example, September 17th, it's the upcoming meeting in 8 days. And probability of one-step decline is considered to be 88%. So, but we don't care just about numbers. What we care about is dynamics. So what we want to see the dynamics. So how the dynamics has changed. So for September, it's pretty much, I think it's already too late. So the probabilities are stacked already. So they won't change much probably. For October, however, we see changing landscape of probabilities. You see that the weaker NFP publication that was published last Friday, so had reshaped probabilities. So the probability of a one-step decline for October had diminished to 1.59%. So market believes that we will have. Sorry, it's not for one-step decline. If it's a probability of the scenario that we won't have any interest rate decline. For one-step decline, it's 20%. It's 20%. Sorry. For two-step decline, it's 71%. So the market is becoming more dovish. So market is believing that we'll have more interest rate declines than probably are already priced in. So for December, for example, for December's meeting of the Fed, so we already have 65% of probability that we will have three declines of interest rate in the upcoming season. So that's a dovish scenario that basically pushes down the American dollar, and it gives support to gold, to stock indices, and to other assets which we call cyclical assets. Cyclical assets means speculative assets which benefit from the lower interest rates. So another figure that I wanted to show you on Bloomberg. So usually September is the not very good month for stocks, for stock indices, for NASDAQ, Dow Jones, S&P 500, whatever it is. So that's not very good month seasonally. So that's a historically poor performance. Volatility usually goes up in September. But when the interest rate is cut by the US Central Bank with no recession, while there is no recession, usually this month is considered to be positive. So just exactly in the historical retrospective, so the data is not enough maybe, but we did have the same month in 95, in 2007, in 2019, so just ahead of the COVID crisis. So interest rate was cut in September, and despite the overall bad statistics for September, despite the volatility growth, so the month was considered bullish. So maybe we have the same month, we will have the same month in September. So at least currently everything points to that. All right, so let's keep it in mind. So because we have this shift of probabilities, let's keep that in mind. Also, other than that, what else do we have? So we have, if we go to 30-year bonds yields, 30-year bond yields, not for Japan, so I wanted to see for the United States. For the United States, 30-year bonds yields, if we go to CNBC, we see 4.72%. So that's a decline. I would say pretty substantial decline, fueled by the weaker NFP numbers. So 22K versus 73K anticipated. So that's a lot. But today we will have the revision of NFP. So maybe they will revise it. So we never know. So just let's keep an eye on that. But anyway, the trend is clear. So yields are diminishing, so probabilities are declining, so the American dollar is being pushed down. Most of this pressure is already priced in, but 2 cuts were priced in, not the 3 cuts. So with that, the current market condition currently, helps the capital to flow out of the US dollar and to flow in to US 500, which is S&P 500, gold, and Bitcoin. So at least current market conditions favor speculations for cyclical assets, even though volatility usually rises in September. All right, let's quickly go to calendar and see what's going to be published this week. So Tuesday, September 9th, 2025. Scrolling it down, so we have non-farm payrolls revision today. So in the afternoon, so for my time zone, so the previous was minus 818K, so that's a lot. So let's see what revision would be here this time. So by the way, Donald Trump was not happy with that. He was going to fire some responsible person from Bureau of Labor Statistics because of those revisions, because I don't know. So I don't think that it is good either when they revise the data too often, because that kind of confuses the market. But anyway, let's see what they will post here within this publication. Wednesday is usually the day of the crude oil. So crude oil stocks change, petroleum status report, imports change, and all that stuff connected to the crude oil. We'll later see the development for crude oil. PPI for the United States, the producer price index, core PPI, that's a production inflation. So let's keep an eye on that. So not super important, but for some asset classes it might be important. ECB interest rate decision on Thursday. Okay, so European Central Bank expected to stay to leave the rate unchanged at 2.15%. Not a huge deal, so it's already priced in. Probably they won't give a surprise to the market, but let's observe. And of course, US core inflation rate or CPI publication, CPI inflation. So it's expected to be unchanged. Overall, 3.1% of core inflation rate for the United States. So that's an expectation, at least for current week. Though Thursday will be a very important day, both for European asset classes, both for the United States related asset classes. So keep an eye on Thursday. Volatility may come up on Thursday. So also don't forget that we have September. September is the month when volatility usually pops up. Just let me show you one picture which is worth 1,000 words. That's a VIX, that's US 500 volatility index. That's a cyclical expectation of this index. So you see those downswings of VIX moving down, so establishing the new bottoms, the new dips. We did have another dip at the end of August. Now it's moving down, meaning that at least for now, so that might be market is bullish. I mean, the US stock market is bullish, but the overall turn might be around the corner. The tone of volatility may be around the corner. A lot of fund managers, they buy VXX, which is ETF, helping them to gain protection against the turmoil, so that it returns the daily protection against the volatility. So in September, volatility expectations might be increased. So in other words, we might see some growth of VIX, and that would be probably very logical. Very logical, though, of course, it does not necessarily mean that the market will close September in the red, so maybe not. But some correction, some volatility might be expected. So what do I mean by that? For example, volatility, the market will be bought back, close September in the green, but in the meantime, the correction might be happening. So let's not forget about that. All right, so Thursday is a very important day when volatility might shake the market. So let's not forget about that. Friday, September 12th. Okay, so scrolling it down, so we have some data for the UK, for Eurozone, and Michigan Consumer Sentiment Index preliminary. will be published also on Friday. So pretty busy week. So I would say pretty busy week, especially if we're talking about Thursday and today, the revision of NFP. So we are operating under expectation of volatility rising. So let's now go to charts. With that in mind, with everything in mind, let's go to charts. Though in the short term, for example, at least for a couple of days, we have expectations for the US dollar moving down. And that's exactly what is happening right now. If you see the American dollar index, so it's starting this week. You see the pressure which is being imposed on the market this week. So why is it going down? So it is going down basically because we have changes in expectations. So when expectations about the interest rate decline changes towards the more dovish expectation, towards the expectation of a, more dovish policy, lower interest rates or higher probabilities of the lower interest rates. So American dollar usually gets under pressure because yields of government bonds are declining. The less money goes to bonds, the more money goes to stocks, cryptos and gold. So that's what's happening right now. So I would consider that, for example, if you trade today, if you're a day trader, so your position probably would be long Euro USD, short DXY, and maybe long gold. However, gold is at the peak, so let's not forget that the trade location is pretty dangerous. When it's positioned at the peak, it's pretty dangerous. It's not necessarily a reversal, but when the trend is mature, it makes a lot of sense to capture liquidations, sell-offs, and some volatility shakeouts. What do I mean by that? So if you want to build a good position, that's not a very good decision to jump in at the peak. For example, when the market is positioned at the peak, it's not a very good decision to jump in at the peak. Not at all. So maybe if the market establishes some range and then shakes this range to the downside, so that might be your entry point. That might be the point when you enter the position. That would make a lot more sense. So that's a day trading, probably the day trading market. So when you can day trade, capture the pullback, wait until the market, for example, confirms the reversal, and then you get out at the peak. So that's exactly how money is being made on the mature market. Well, maybe the market will continue its move. We don't know, and we never know that. And either we don't know that, for example, the correction will not happen. It might happen. But if you follow the trend, the best course of action would be to maybe expect the at least sideways continuation of this trend, to capture a reversal from the local bottom and to unload position at the peak. That's what might actually happen here. But jumping at the peak when the trend is already mature, when the trend has taken off, not a good decision probably. Maybe not a good decision. I understand you guys. So FOMO is there, fear of missing out. Everybody wants to trade gold, to jump in on the gold market, but we are not investors, okay? So we are traders. For trader, it's essential to keep your risk under control, to keep it low, to gain the higher probability of your trade, if possible. So, but that's not just about getting into the market, which is already hot, which is already overheated. So you should have done before. You should have done that when the market was exiting out of the range. So now probably it's too late. So, but let's take a look at related markets, as gold is actually driving the entire precious metals group. So let's watch if we can, for example, trade silver or platinum or palladium. So silver is consolidating, so it's not showing momentum unlike gold for already several days. So it's lagging actually, it's lagging. And given that it's the peak, so silver usually it's not very much momentum type of market. So at first it starts to move, then it stops. So that's a typical behavior of silver. And I think that silver is done for the rest of September. So if you want to get on silver, maybe you should be a counter trend trader to search for short entries. But I don't think that's a very good profit-loss ratio, to be honest. I don't think that's a huge opportunity. Palladium and platinum. So let's quickly go through these markets. Well, palladium, for example, on the contrary to gold and silver, is standing at the base. So it's standing at the support. And that might be actually quite interesting because it's building what we call the cup and the handle pattern, the base pattern. and given the overall correlation with the precious metals, so just take a look at what is forming. So I think it would be very logical to see it bouncing towards 1300, for example. That's pretty tough market to trade inside of the day because the spread is a little bit higher and the overall behavior of the market is relatively noisy. But I think that the current driver behind gold and silver might actually give this market some driver to the upside. So if you're a swing trader, if you're okay with placing more distant stops, with taking smaller volume, by the way, placing distant stops doesn't mean that you have to keep the same volume. So you have to adjust to risk management, right? But I think that the overall bullish expectation might be fair for platinum. Palladium is the same, so it's also not moving, so the momentum was pretty weak for palladium, so now it's kind of trying to get out of the range. It's positioned close to the support, and I think these two markets are preparing for the takeoff. So I would not be surprised if I see the big day, some breakout day for platinum, so it's positioned very close to the support, on the contrary to gold, by the way. So if, for example, if you're a swing trader, if you're searching for a trade with low risk and extended reward, so platinum might be the way to go. So consider that the gold is moving up. So that's some rotation in this market. Something had grown. Other asset classes then are moving in the same direction at some point. And given that we have declining probabilities of interest rates, so that's the support for this market, American dollar is declining. So, of course, that's not a guarantee, and I know traders don't like these instruments because of their tempo. The tempo is not very fast, but sometimes, you know, these markets, platinum, palladium, they pretty nicely are bouncing off their support zones. All right, so that's pretty clear, by the way. So not clear, so nothing is clear in the markets, but that's a precious metals group. So now let's transition to other markets and see what we can do in the currency market. For example, Euro USD. So is it to buy given the weakness of the American dollar, given the pressure of the American dollar? Well, it's not positioned right at the support zone, so it's at the top of the Bollinger Bands, which is the 2 standard deviations level. But the overall trend probably now is still going up, though you have to be selective with your trade locations, I think, because you see what's going on in this market. It's not very fast, it's not very rapid, so you need to pick something like, I don't know, so you can take something like trend line and go with the false breakout of this trend line, something like that. For example, market bounces, then market retests this area, and then market continues to move higher. So that's a typical pattern. When the market, squeezes the liquidity down the formation, so breaking the area behind or below the formation, and that's the way you jump in. So something like that. I think something like that would be probably possible, but you have to be patient a little bit. Otherwise market may whipsaw you very quickly here. All right, Bitcoin. So yeah, Bitcoin, by the way, is pretty interesting. We have the question about Bitcoin from Joyce. Bitcoin is pretty interesting because it's currently recovering already at the 3rd day, and Bitcoin shows greater momentum than ETH right now, which is consolidating. ETH was a winner for the entire month of August, July, so it was a great winner, so it had produced a lot of gains. But now you see that the dynamics is pretty clear, that ETH is consolidating, so it loses momentum, loses volatility, Bitcoin gets forward, so it starts beating ETH. And by the way, I will show you one observation. So if we build a spread between Bitcoin and ETH, you see that Bitcoin was at the bottom of the spread. So if we put the Bitcoin at the first place, ETH at the second place, so ETH was beating Bitcoin for the entire summer, but now at the end of August 23rd, so the spread has become, I would say, oversold, if we can say that, right? So Bitcoin was heavily oversold against ETH. It's not oversold, so nobody was selling Bitcoin against the ETH particularly, but it was kind of lagging behind ETH, right? Now the situation is changing. You see it's changing. Bitcoin is kind of regaining momentum. It's regaining momentum, so it's not yet even at the peak of this Bollinger Bands line. So Bitcoin might have the momentum. So if it goes up, I think Bitcoin would be faster. Of course, market is not fast at all right now. The timing and the tempo is pretty low. It's pretty slow. I was, by the way, buying Bitcoin sometime before here at this pullback, and then I sold it at another resistance, which is 112,700 something. So later on, it had considered to stay in the consolidation. So I'm not usually sitting in my positions for weeks. So that's not what I do. So I'm usually either a position day trader or a swing trader that holds positions for a couple of days, not weeks. Later on, would I be joining the Bitcoin or not? So I think the Bitcoin is recovering pretty nicely. So if it will give me another chance to enter the position, something like that, well, not immediately, but if it will pull back, if it will show me the relatively good entry point, so I don't chase the peaks, because that's a momentum trade. Momentum trades don't have very good expectations in terms of statistics. What I want to do is to find the local dip inside of the day. I call them pivot points. So the pivot point might occur when, for example, you will have the rising bar today. The next day market will go up and then pull back for a little bit and then continue going higher. That's the point when I try to get into the position, because the risk is the lowest in the such point, because I work with a confirmed trend. That's number one. Then I put relatively tight stop loss, not very tight, but relatively tight stop loss, and my profit loss ratio in this situation is pretty decent. So I would be searching for such kind of entry. If I get this entry, that's fine. I will get into the trade. If not, if the market will not go up, if it will stay in the consolidation back again, maybe if it will whipsaw this growth, so I will be staying out for a while, because, well, it's pretty, another scenario that it will be continuing to build consolidation back again. That's another scenario. I don't know which one will be more dominant in this case. I think the scenarios are 50-50 in our case. If the market will get volumes today, if it will be closing at the peak, so tomorrow it might be possible to try to jump in, to try to join. But currently I think that the trend is not established yet, though the trade location is relatively good, so it had bounced off the previous low pretty nicely of 1,800. That was a pretty nice combination. By the way, take a look at where I was buying Bitcoin. So it was the second day of the recovery. That was the early trade. I called it an early trade. So if you want to get the best execution, for example, when the market pulls back, shows you the first bar, you enter at the second bar. That's usually the best entry point that you might get if it will go higher. In my particular case, yeah, I've earned something, not a huge amount, but that still was a pretty decent trade. Maybe it has given some like 3-1. It's not a win. That's not a record winner, right? But that was still a winner. So now, of course, the swing is kind of mature, if you see. So it's already moving for several days in a row. So if you measure the number of days, so it's 1, 2, 3, 4, 5, 6, 7, 8, 9 days. When it's moving already in the 9-day streak, so the possibility of it getting the local low is pretty substantial. Local high. Sorry about the local high, of course. So, for example, we can get the red bar, we can get another consolidation, something like that. So, of course, when you have the similar dynamics, so what you want to do is you want to capture the dip below, not above. So that's why currently I'm sitting on the sidelines waiting for the better entry point for Bitcoin, or at least if I will get the big bar today. So if today would be the winner, the big winner, the follow-through day, so tomorrow that might be the continuation, but you have to be very careful in selecting the entry point inside of the day. You also have to buy the dip but it would be the local dip. All right. So currently I would say it's 50-50. So the current continuation of Bitcoin is 50-50. However, in the medium-term perspective, for September, I think Bitcoin will beat ETH, considering its overall lagging nature in July and August. So probably it will start beating ETH. All right. So does that mean that you can short ETH? Well, that's not necessarily the case, because it's kind of going sideways. It's not moving in any direction. It's consolidating after the trend. That's very usual, very logical behavior of the markets to see the consolidation. So as a trending instrument, so it still can, get out of this consolidation for a while. So I'm not sure that this move will be long term. So I expect it to be short term, because usually that doesn't look like an accumulation. That doesn't look like a buyer. These dynamics that we see here completely doesn't look like the participation of any big buyer. Well, it's pretty, it's pretty neutral, I would say. So if we will have any breakout, so I expect this breakout to be short term. Now let's quickly take a look at some on-chain metrics. So in order to understand that, we can go to coinglass.com. That's a third-party website, but that's completely free, so don't worry about that. You can find information absolutely for free here. For example, putting Bitcoin here, I want to show you a couple of observations. Okay, so scrolling it down, so what I want to show you. So all right, volume for Bitcoin, overall volume. Volume is not very huge, so that's good because usually at the beginning of the rally, volume is not big, so then it grows as the market goes higher. Open interest, on the other hand, of the exchanges, open interest is growing. So you see this green line, that's an open interest. It's $80 billion worth of positions holding into the market, and you see that open interest was growing along with the growth of the price. So not every time it happens. Sometimes the price is going up and the open interest is moving down. Now they're moving up simultaneously, so that's a sign of some kind of accumulation for Bitcoin. Not huge, but still some kind of accumulation. Let's watch the ETF performance for Bitcoin. Let's go to Bitcoin ETFs, spot ETFs, and we have some inflow here. Inflow is growing, and it's growing for the third day in a row. We had outflow in September 4th, then it's starting to regain the momentum. So usually when the market is growing and the ETF inflow is growing, so that's a good sign. So that's exactly what we observe right now. So the total ETF inflow. The outflow from the exchanges, on the other hand, so that's another factor. Let's scroll it down, and so give me just a sec. I will show you another metrics here. Let's switch to spot. That's called BTC spot inflow outflow. That's outflow and inflow from exchanges. So speaking of exchanges, people are not moving their Bitcoins from exchanges and to exchanges right now. So they have been moving some Bitcoins from exchanges. There was a negative flow, meaning that they transition their Bitcoins from exchanges towards blockchain. That's usually a bullish sign. So whenever this histogram moves down, that's usually a bullish sign. Just take a look at how the big trends were starting. So there were outflows. So people were moving their Bitcoins out. So they don't want to sell it. That's why they move it from exchanges. So that's exactly what we see right now. That's not huge yet. So they still hold some Bitcoins on the exchanges, but that's a neutral combination right now. That's not a big deal right now. So I would say that combination of factors show that Bitcoin is actually pretty bullish. So another last thing that I want to show is MVRV score. It's the market value versus realized value normalized. So you see that that's a green line. It's moving down, but it's still pretty high. So it's 2. It's worth 2. Above 2, it's considered as a bullish factor, bullish sign. So it's pretty healthy market. For ETH, for example, that's a different thing. That's a different story. For example, if we go to Ethereum and to go MVRV score, Well, it's only Bitcoin. Why do we not have ETH here? ETH has actually something like 1.5. I don't see why do we not observe it here, but whatever. All right, so Bitcoin looks relatively healthier in terms of on-chain metrics, MVR, VZ score, market value versus realized value. So that's why I'm putting more attention on Bitcoin versus ETH. All right, another thing. So let's go to American market, US tech. US tech is currently moving in the, which is Nasdaq, by the way. It's moving in the uptrend, so it had rebounded off nicely. So now it's moving slightly outside of the support. It's coming closer to the higher border of the Bollinger Bands. Statistically, it's known that when Nasdaq is moving towards the upper band of the Bollinger Bands, usually it continues to move for several days because that's a momentum type of instrument. I don't know if you can make your own research, just take a look at how it behaves close to the 2 standard deviations line. So it continues to move for several days. It doesn't reverse quickly. So this momentum type of behavior is sustained usually over the period of at least 3 to 5 days. So we are inside of this window right now. We haven't touched the upper border yet, but we are in the upside window. So technological stocks are feeling currently slightly better than any other stocks, and here's why. So if we go to TradingView and build a spread between, for example, XLK, which is technological ETF, and for example, I don't know, let's put here industrial, so which is Dow Jones in other case. So you see that previously technological sector was heavily undervalued, and it was in August 22nd. Currently it's moving up, so it's regaining momentum against Dow Jones. So by the way, here if we look at the peak, August 15th, so technological sector was overvalued against the Dow Jones. So that's exactly where we could buy Dow Jones. That's what we've been discussing in our sessions, in our streaming sessions. Currently the situation is pretty neutral. Nothing is dominating, but Nasdaq is regaining momentum back again. So when this spread will get here again, give me just a sec. I don't know why. That's why. All right, when the spread will get overheated again, so we can switch from Nasdaq to Dow Jones back again. Currently, Nasdaq probably is dominating. So of course, it's a tricky market. So it's not very. So it contains a lot of daily noise, intraday noise. So be careful about that, especially on the opening of the US session. It might go higher, then it may get the immediate liquidation to the downside, then it might be supported, something like that. So that's a tricky market, so don't expect it to move very softly. So I would say, so expect the volatility, expect the noise, and if you see such pullback action later, for example, later in the US session, so you may think about joining this, or at least I will think about that. So that's not an investment or trading advice. So you make your own decisions, but I will think about joining Nasdaq and selling it at the peak. Again, buying and selling at the peak. So that's a stair-stepping type of trend. That would be my strategy for the week. Buying Nasdaq lower, selling at the peak, buying lower, selling at the peak. By the way, the same with gold. The same with gold. The market is mature, and what you want to do here is to avoid being whipsawed, avoid being caught. So correction might happen. After correction, so the recovery might be visible. So I don't know if it will go lower substantially. Nobody knows that, but if it corrects, so you can initiate a day trade here. So I think it would be reasonable, because such trends, they don't stop quickly. They first turn into the sideways action, and later on, then they might reverse, but that would be substantially later. So before that, usually that's a type of this sideways action that will last for some time before it reverses. All right, guys, by the way, I encourage you to post something in chat, to ask your questions. So what exactly are you monitoring right now? What's on your list? How was your trading week? The previous trading week, we had a delay in our streaming session. So just share something in chat. So which city are you watching us from? What instruments are you trading? And so we will review those instruments. So if you like. All right, meanwhile, we are continuing with our analysis. All right, so what about crude oil? Energy markets. Let's take a quick look at energy markets. So it confirms the overall downtrend. We've been putting this as a downtrend. By the way, you can find me on TradingView. Sometimes I post there my suggestions here. For example, I don't know, if we go to TradingView and you can find me as Stanislav Bernukhov, Exness. So I post my ideas there from time to time, and that's exactly was the idea, that we should be waiting for the pullback for crude oil. So it's still a bearish market. That's exactly what we observe right now. So 65 was the resistance, now it's moving down. So I think that 60 level might be reached anytime soon. So we are still in a downtrend. I don't know if necessarily it will be this week. So because currently that's a third day of the recovery. So that's a local low here. So currently the market is testing the 20-day moving average line. So, but I think that would be pretty logical, by the way, if it can test this level, fail to break through, and then another next stop will be at 60. So that would be completely logical. So I would be probably monitoring for this scenario. So that's a level. If it fails to break, if it fails to sustain the breakout, we can ride the market down towards 60. 60 is a level of, it's a fair price to do business according to many metrics, especially, for example, metrics from Energy Administration of the United States, EIA.gov. So if we go here and go to STO, which is short-term energy outlook, you see that according to the expectation for this year, so it's even less than 60. So the market is expected to plummet less than 60 according to supply and demand equilibrium. So that's why it doesn't hold the upside breakouts. You see, it cannot go through 65, so it cannot hold. So currently the strategy for crude oil would be to monitor for false breakouts. If it confirms the false breakout, so that might be your short entry position. So that might be the preferred strategy for crude oil. However, don't try to chase for the lows. Try to at least find some kind of a pullback. For example, how exactly? So for example, market plummeted here. Well, you might have chased it, but the much better entry point would be here. When the market just tests the Bollinger, you have substantially smaller stop loss, and you get the pretty decent profit loss ratio in this case. And the same thing might be done here. If it pulls back, the same thing might be done here. Just that's a general trading rule of thumb. Yeah, you don't chase the market, so you wait the market, or you let the market to give you a good entry point. You let the market come to you. You don't chase the market. So that's the rule of thumb. All right, so let me read some messages of yours in chat. So currently trading BTC, Bello Mohammed tells us, currently trading BTC, is BTC at resistance on 4 hours? I just started selling. All right, let's take a look. As I've said, it's 50-50. I think of it as a 50-50 right now. I don't think selling necessarily might be a very good option because currently it's actually recovering. So remember that we are talking not just about technical picture, we are talking about market conditions. Market conditions favor longs, not shorts. Why is that? So let's quickly go through that once again. So probabilities of interest rate decline is expanding. So for October, this year. For example, if we take a look at October's expectations, October's meeting of the Fed, probabilities point for increased expectation for already two declines of the interest rate. So, and that is a change. So we don't care about numbers itself, we care about change. At September 4th, this probability was at 44%. Now it had fallen. Now it had grown actually to 76%. And so why is this number moving down? Actually, this curve is moving down. So this curve is the probability of interest rate declining for one step. So that's diminishing. So that's a long expectation. American dollar is under pressure, and Bitcoin, gold, and stock indices under support. So that's exactly what we see from the market conditions standpoint. If you go against Bitcoin right now, you kind of go against the capital, you go against the market. I don't say that will not go down inside of the day, right? If you're a scalper, you may still capture something, because technically, yes, it had reached some kind of resistance, and you may capture something out of that. But that's pretty dangerous, because you might see, the big bar suddenly appearing from the nowhere with huge volume, going higher. So because if the overall market looks for buying Bitcoin and you're going against it, you have to be nimble. You have to be very fast of taking your profits, and you have to secure your positions very, very tightly. Otherwise, you might see the big bar, wiping you out of the position. So don't go against the flow. So that's a general rule of thumb. Not going against the flow, going with the flow, going with the trend, going with the big capital. So that's exactly what we're trying to do. Inside of the day, yes, that might not be the best entry point to the long side. And sometimes contrarian traders might capture something out of that. But it's much easier, I don't say easy, but it's much simpler to capture long. So to go against the pullback rather than to go against the peak. So it's much easier to build positions on the long side in such market conditions. What do you think about Euro Pound? All right, so let's go through Euro Pound. Let's take a quick look of what's going on here. Euro Pound. So Euro Pound is basically, they correlate between each other, Euro and Pound, so that's not a trending instrument. So good opportunities happen when it pushes the border beyond 2 standard deviation. So when it, for example, drops below the Bollinger or above the Bollinger. So in this case, we have the rotation between Euro and Pound, which we don't see right now. So usually, so you see that the overall spread, I call it spread, but it's a cross pair, of course, but it's a spread between Euro and Pound. So this spread is moving kind of between these trading range lines, and currently, so we had opportunity maybe a week ago, some middle of previous week. So now I think it's balancing, it's becoming more neutral. So if you want to sell, I don't think that's a huge opportunity right now. So here at such points, that would be good. Currently, either we don't have any trending activity, so some activity might be visible, some bullish activity might be visible, because we see some swings going up, but these are just 2 swings yet, meaning that we don't see any substantial strength of Euro versus Pound. If we would have 3 swings in a row, like that, the 4th would be, so we would say, okay, we have a trend here, the Euro moves against Pound, and we gotta join the position on the trend. Currently we don't see that yet, so if we have another swing up, then we might be considering this as a trending market. But I don't think now it is a trending market yet. It's not yet a trending market, so it's just a range bound market, and as a range-bound market, you have to pick it when it goes from oversold to overbought here, and that would be probably your point of action. So maybe not necessarily now. I don't see any huge opportunities, to be honest. So my current bias would be long gold, long Nasdaq, but on the pullbacks, not at the peak, but on the pullbacks. Long gold, long Bitcoin, long Nasdaq this week, particularly ahead of Thursday, on the pullbacks, okay? Not at the peaks, on the pullbacks. Because market conditions are showing the weakness of the American dollar. They are showing change in expectations. So the capital flows out of the dollar, out of the US bonds, moves towards speculative assets. That's exactly what's happening right now. All right, volatility still, of course, may expand in September. And let's not forget about that. But as I've said, so currently when we have no recession, when September weakness is offset by the Fed, usually we have positive month for stocks, well, and also Bitcoin and gold. We have it in September. So that's exactly what we see. So that's the picture, which is worth 1,000 words. All right, now let's take a quick look of what's happening, for example, from the volume and interest rate perspective, especially for commodity futures like crude oil and gold. So for gold, let's click it here to see if anything had changed in the open interest and volume perspective. Commitment of traders shows that the overall change in commercial traders' position as well as big speculators' position shows some movement, but it's not that huge. I mean, it's far from the previous peaks. It's even far from this peak, the local peak in July. So that's why I think we're still in the trend. Whenever this line drops, the commercial traders' position drops to the new low, that means that commercial traders, they establish the big short position. And usually that might be the precursor of reversal, but that's not what we see right now, so it's still far from the low. So that's a perfectly trending market. That doesn't mean that it will necessarily continue rising today, but at least we don't see big positions unloading yet. That does not mean that they will not sell, but at least we don't see such kind of action, at least for now. For crude oil, what change do we have? We have rising position for commercial traders. So yeah, it's moving up. I mean, the commercial traders' net position is moving up. It's at the new peak. So maybe the crude oil will also reverse, but I think that before that it might reach 60. So the short-term dynamics usually is determined by the green group. So that's the large speculators. They are pushing the markets towards the new lows, and in a short-term perspective the green line dominates the action. In the medium-term perspective, the red line might shape the reversal. That's what's happening right now. So that's what we have in terms of volume and open interest. So another things which we might take into consideration, let's go to cmagroup.com. Watch GC, for example. I know you guys, lots of you are trading gold, so that's another view of the market in order to understand if the market is interesting for the big traders, big market participants. We go to gold, we put GC futures, we go to volume and open interest tab, and we see what's going on in terms of volume and open interest. You see that volume is increasing since August 25. Well, that's remarkable. It was 107,000 contracts. Now it's 256 contracts. So volume had grown twice for futures since August 26th. Well, that's obvious because it was an uptrend, right? So that's obvious, but that's what we see right now. Volume is not dropping, so the market is going up. Volume is not dropping, though it's stabilizing a little bit, as you see. Open interest is also not dropping, so it's rising. So it's particularly since August, it was 4,042 contracts. Now it's 504,000 contracts. So it's growth more than 10%, almost 15% of open interest. Open interest is a number of contracts outstanding, so which means that they hold it overnight. It usually is not growing like volume twice, right? But it's still in the uptrend. So gold is interesting. So many market participants are getting back to gold. You have to be careful, because when such interest increases, market starts, to fight for liquidity. Because here there was a different story. It was a local low. By the way, we've been speaking about that on previous streams. When the volume is low, the risk is pretty low. Your risk is pretty low. So when you open the position, nobody wants to wipe you out. So because nobody is interested in this market. But when it grows twice, you start fighting for the position with other market participants, and you experience whipsaw type of action, you experience sudden volatility and all that stuff. So nobody will give you the comfort zone anymore. So so the best course of action is to use that. Don't allow the market to wipe you out like that, for example, but instead you might want to use that for building the positions. But when the market is mature, so nobody will give you comfort zone anymore. So that's a rule of thumb. That's a classical behavior of the marketplace, which we should be not forgetting about. All right, guys, I think we have maybe last 5 minutes for questions. Give me some instrument. We'll go through that. What else interesting might be today? Okay, so I know a lot of traders, they trade in pound yen and instruments against the yen. So yen pairs are still displaying low volatility. Euro yen, pound yen, so that's a low volatility, and yen actually displays some strength. So for example, if you go to Google and Google 30-year bonds yields Japan for Japan, all right, so let's click it here. We see that capital flows into the bond market 3.26. So you see that it has established new peak not so long ago. Now it continues to move higher, 325. So that acts as a safe haven, but not just because it's a safe haven per se, but because the yields of these bonds, or yield of currency of Japan, is actually increasing. So it's no longer the low yield currency which might be taken for the loans. Well, still, of course, the interest rate is pretty low, so the carry trade operations, that's still continuing to expand. But it's not the market which is diminishing so quickly, right? So we see that it's not breaking through the peak. The volatility was low, right, for the long time. Usually when that happens, market is ready to shake off, to bounce from this trading range. That's not happening right now. So it's just expanding the range, but no move is visible. So for that, I think that we might see the continuation of the volatility may still continue to shake off, something like that. And so be prepared with that. So if I would build a position, so I would still might be short yen, but not specifically now. Why I would be short yen? Because yen actually, so despite its growing yields, still that's a trending market in terms of in a technical perspective. So I think it's not over yet. So because we had a long consolidation, so usually it needs to establish the new peak before it actually reverses. So another wave up would be absolutely logical, but I would start to pick it at the support, not here. All right, guys, thank you for joining. I think we're done for today. So I was glad to see you all here on the stream. See you next Tuesday. So now we have the time for the streams adjusted, so don't forget about that. It's slightly earlier than previously, actually 2 hours earlier. So hopefully we will see you all next Tuesday. So that was Stan, Senior Trading Specialist at Exness. So subscribe, don't forget to give us a like. As YouTubers say, smash the like button for YouTube algorithm. And subscribe to Exness channel, bring your friends, fellow traders. Hopefully we will give away more value each week, and we will help you become better traders. So yeah, good luck. That was Stan. Have a good trading week ahead.